What is going on, traders? Welcome to another video. This one is going to be about how to approach trading with a mechanical framework or a mechanical trading model. The model I'm using is the modded version of the T-Trades fractal model, and thank you to T-Trades for his teachings. It follows the idea of the MMXM's next day model, the fit of the price delivery, the daily profile, and candle confirmation, and obviously the order blocks. Now I will go over the flowchart and some side notes, and then we will talk about the discretionary part of the model. This is the flowchart for the model that I'm using, and these are the side notes. So first we will start with the daily bias. Is the daily bias clear? If no, then there will be no trade, because if you don't know the direction of the daily candle, then you shouldn't be trading. The next step is, if the daily bias is clear, you should go to the 4 hour or 1 hour chart, and you should look for established high or low of the day. Is there an established high or low of the day? If no, then you shouldn't be trading. The established high or low of the day means a daily profile or a protected swing that is formed within the daily range. If there is an established high or low of the day, then the next thing is, are the feather the price delivery clear? Then going into the newer session or whichever session you are trading, you should look for the feather the price delivery. Are the feather price delivery clear? If yes, then you should be proceeding. If no, then there will be no trade. Now the next step is wait for the swing point. Is there a swing point at point of interest in the newer session? If no swing point is there, then you shouldn't be trading. If there is a swing point, then you should prepare yourself for the entry. Now the next step is the reversal candle or the candle 2 of the swing point aligned with SMT divergence, time, or strong confidence like the equities open or the driver? Then you should be trading the candle 2. If the candle 2 has a small change in state of delivery and it is a confirmed reversal. If no, then you should be waiting for the order block and the candle 3. Now these are some side notes. The established low can be confirmed through the hourly change in state of delivery. I will show you on the charts. If there is no established high or low of the day till the newer session, then you should wait for the driver to create it. If the driver is creating that reversal candle at the relevant point of interest, then there is no need for the hourly change in state of delivery, because it will consume the whole daily range. You should be trading that candle third after the price action reaching at a key level at the driver. Now always trade post 9:30, there is no exceptions. Now trading relative to the 4 hour candle can get you involved by high time frame expansion. This is optional. You can trade like relative to the high time frame, like waiting for the 9:30 reversal and trading within the 10 a.m. or trading within the 2 a.m. candle in the learning session. This is optional. If the price prior to the new work is expanded, then wait for retracement. If the price prior to the negotiation is consolidated or consolidating within the negotiation, then you would wait for that manipulation, and after time it is occurring with the driver. Now, if the price is protracted and the creation of the wick base, then you have to wait for that reversal, that V-shaped recovery, the change in state of delivery. If the price is already reversed, then you should wait for that continuation entry within a fair value gap or a continuation purge. Now this is the discretionary part of the model. Size of the daily candle matters. If large opposing run or the daily candle has a large wick, then it means it will be printing a small body and it would be a reversal or less expansion candle. Now if small opposing run or small wick, then it means the candle will be printing a large body and that would be an expansion candle. Now use the average daily range. This is to expect the expansion within the current or the next candle. You have to compare the range of the previous candles and expect this candle to print that much range. The phase of price delivery, although the phase of price delivery are mechanical, but it has also its discretionary part. If you are expanding prior to the negotiation, then wait for the next leg or next phase of price delivery. You should avoid rushing entries, because sometimes you get caught in the consolidation. You are mistaking it with a swing point within that consolidation. So you have to wait for that feather price delivery. This is kind of discretionary. Now the high time frame context, if the high time frame is consolidating or you are within a large range, then you won't pattern trade, because until the high time frame range is taken, there will be messy price action. Now trading past the highs or lows, when we are reaching a high or a low and the price is expanding towards that, then you shouldn't be trading the continuation or reversal. You have to wait for the clear reversal signature or obvious continuation. This is like the important part. Like the price will reach a key level and people will buy from there. So you have to wait for the next pay the price delivery to get inside with either a continuation higher or a reversal lower. So this will be the cautious part. And now we will go over a bunch of examples on the charts and I will show you how to use this flow chart. Starting with our first example, we are on the NQ and ES daily chart. So using the flow chart, first we have to identify the daily buys. If it's clear, then we will go to the next step. So here on the Monday, we have an SMT divergence with the ES. The ES is not taking this low and the NQ is creating that SMT divergence after taking the Friday's low. So it suggests that the price will go higher and there are a bunch of failure swings above us. Our daily bias is bullish. Now let's go to the next step. Now the next step is there an established high or low of the day? So we will check for that. So dropping down to the 4-hour or 1-hour chart. On the 4-hour chart, the price action isn't looking very clean due to this gap, but we do have an SMT divergence. Another one, the ES is tagging this low and the NQ is creating that bullish SMT divergence. Now going into the 1-hour chart to wait for the daily profile or established low of the day. Now here on the hourly chart, you can see that from the daily open, we have protracted down and we have closed above the consecutive series of down close candle, changing the state of delivery to bullish. Now this is our established low of the day and the new work will be continuing higher. Since we are at AM, we will wait for the equities open to do that manipulation and then we will trade the post 930. And as you can see, the 930 manipulated this low once again and tapped into this fair value gap or this change in the state of delivery. Now after an established higher low of the day, we would wait for the feather price delivery. So the feather price delivery in this case was a retracement, the 930 retrace because there was a slower price section, a consolidation, followed by a retracement and now closing above this candle again and starting that expansion. So all the steps are aligning. Now is the reversal candle aligned with time SMT divergence? Yes, it is aligning. We also have SMT divergence at these lows and it is 930, but since we have a large wick lower, we cannot seek entries within this candle. So we would wait for the continuation entry within the 10 AM candle. Now here on the 5-minute chart, you can see that we haven't changed the state of delivery yet within that reversal candle. So we would wait for the closure above the consecutive series of down close candle to confirm that as a change in the state of delivery. Now we have that change in the state of delivery within this candle. Now this is a confirmed reversal, but here we have another SMT divergence with the ES, and it is suggesting this the NQ is now a stronger asset. And also we can use this candle as our invalidation because at this point the ES already had that change in the state of delivery, so we can assume the NQ to go higher. So I would enter on the next candle and I can put my stop loss below this invalidation point if the bodies are at the wick lows, and I will target 2R. And after a while the price expanded higher, completing our objective. So it followed all the rules from the flowchart, the daily bias, the established high or low of the day, which was the London reversal, then the feather price delivery, which was retracement, then time or SMT confluence with the candle 2. So it was present, but we didn't tag that entry due to the large series of candles. And then we had that continuation order block right there, an expansion higher. Now after that day is over, on the next day, we reach into these highs. And on the ES, we also took this high. Now we don't know what feather price delivery will be next. So obviously our target was these highs. They kind of expanded into these highs, and now we will see on the lower time frames what feather price delivery is after taking that high, and we will act accordingly. So dropping down to the 4-hour chart. So after reaching the highs, we need another feather price delivery. On the 4-hour chart, it's a bit messy, so I'll drop down to the 1-hour chart. Now using the flow chart, is our daily bias clear? It's not until the newer session, so we will go to the next step, which is the 4-hour, 1-hour chart. Is there established higher low of the day? Until now, there isn't any established higher low of the day, so we would wait for that driver, the 930 or S30. So skipping the price section into that. So here on the hourly chart, you can see after reaching that high, we are kind of consolidating. So we need either a manipulation lower or a manipulation higher to get inside with the distribution. Now here on the 930 candle, you can see that we had a consolidation followed by a manipulation. Same thing on the NQ, but the NQ was a little bit stronger to reaching the highs, consolidation, manipulation of the high, and now 930 is going lower. So this means that 930 manipulated higher, and now we will continue lower. And also we have established high of the day now. This is the change in state of delivery, confirming the New York reversal profile. So now we will drop down to the 5-minute chart to get on side with the distribution lower. Now you can see on the 930, we manipulated that protected swing again. And now we close below the consecutive serial above close candles. So this is now a change in the state of delivery. If I'm entering here, my stop loss would be too wide. So I would wait for the continuation order block. Now the 10 a.m. candle is ahead, so I need an opposing run followed by closure below to take that continuation order block entry. Now the price is consolidating within this range. Now the price is taking the range high. We get a closure below, but this isn't a clean order block because we have a larger series of candles to deal with. So we will wait for another continuation order block. And unfortunately the price retraced higher, which is invalidating the idea of expansion, and this day didn't provide us any entry, so we will skip into the next example. Now for the next example, which is 16th of July, we had that candle closure after taking the highs, that wick creation, that reversal candle, so we are expecting a continuation lowers. We have a bunch of failure swings on the NQ and the ES. So now we will skip it into the newer session. Our daily bias for the next day is bearish, and we will see the next steps in the newer session. So now here on the hourly chart, you can see that the previous day was a large reversal day, and we will use the 50% of its weight to then continue lower. So from the start of the day, we have created the low of the day first, which we didn't want to see because it is a low probability. For us to expand lower, we first need to create the high of the day, but we will wait for the equities open. Now on the equities open, you can see we have taken this high and we are reversing lower, which is a continuation signature to the downside. And now we will use our flow chart. So we have a clear bias, which is bearish, and is there established higher low of the day. The equities open is going to create that. And what is the feather price delivery? It is a reversal. So we will get on side with the next candle. Now, is there a swing point? Yes, we took the previous candle low inside the 50% of the previous candle's range, and now we will take the lower time frame entries. So now going down to the 5-minute chart. Now on the 5-minute chart with the equities open large candle, we have that change in the state of delivery within that candle too, and now we need a continuation order block to get on side with the distribution, or we need a retest of this change in the state of delivery. And now on 935 we have created a bullish candle. So on these occasions, because compared to the prior entries, in this one we get a better RR if we put our stop loss above the 50%. This is 35 points, and we have a lot of failure swings to the downside, which can give us a good RR. Or you can wait for that continuation order block, but compared to the previous entries, it is a decent amount of retracement, so we can get on the side here, and the price expanded lower, and let's see if it is providing a continuation order block. And after the 10 a.m. the expansion is over and the price is just chopping around. So here you can get two types of entry, either continuation order block, either a retest or entry at the next candle, or waiting for a better RR, a slight retracement. So it is following all the components from the flowchart. We had a bearish daily price. We had established high of the day with the equities open. The failure price delivery was reversal, and the swing point was at the 50% of the previous day's range, which is a key level. Equities open was aligning with their reversal candle, and we traded inside that C2 because it was a clear reversal. Now after that day is printed, now going into the next day, the bias is obvious. We have taken these failure swings on the ES, and on the NQ we are creating that bullish SMT divergence right here. So it is suggesting this the ES will draw to the all-time high, so does the NQ, and our bias is bullish, and we will use the 50% of this week as our point of interest for the next day to expand higher. So now we have our bias clear. Now dropping down to the 4-hour chart or 1-hour chart to see the established high or low of the day. Now here on the 4-hour chart, you can see that from the 18, we created the low of the day from a manipulation, and then we expanded her. And what does the 6 a.m. candle do? It retraces into this fair value gap, which is a continuation signature. So it means that we will draw to these highs. So this is confirming our bias. Now dropping down to the 1-hour chart to see that establish of the day. Now here on the hourly chart, you can see that we have an intra-week reversal within the previous day, midweek reversal, then Thursday continuation higher. So we were expecting that continuation inside the 50% of this week, and we get that. And we had an Asia reversal profile. You can see that Asia took this low, and NQ created that SMT divergence, which is indicating the low of the day from an SMT divergence and also a closure above the consecutive series of down close candles. So we will seek the newer continuation entries, and the point of interest we can see as this fair value gap right here, which can be used for that continuation entries. And going into the newer session and the time, we already have that protected swing, but I'm always waiting for the 930 equity release, so we would wait one candle more. And as always, the equities open manipulated their protected swing once again, and now we will see continuation entries. So all upward step from the flowchart are aligning. We have a clear bullish daily buys. We have established low of the day within the Asia, further price delivery as retracement into a fair value gap, followed by expansion or reversal higher, and wait for a swing point inside a point of interest, which is that fair value gap. And we had another manipulation on the equities open, which is that second candle aligned with SMT or strong confluence. So we can trade that candle 2 or wait for the order block. So dropping down to the 5 minute now. For taking that low, we have closed above the consecutive series of down close candles, confirming the change in the state of delivery, and the equities open expanded higher, which is a continuation signature. Now we cannot enter at the next candle because if we enter here, a stop loss would be too wide, or if we are putting it into 50%, it will be above the 50 points. So we would wait for that continuation order block. Now we have consecutive series of down close candle and to the previous change in the state of delivery or this fair value gap, and now we need a closure above this, and now we get that closure above. This is not a high probability order block for me because for in a high probability order block we need opposing run within less time followed by opposing run higher within less time. So we need that order block within the first 30 minutes of the candle, but since we have a large stop loss to deal with, I can enter here and expect the 11M to expand higher. I would put my stop loss here, which is 44 points, and I would target 2R, and the price expanded higher, completing our objective. So this was the trade based on the flow chart. We had our daily buys, which was bullish. We had established low of the day in the Asia, and the further price delivery was a retracement into expansion. Point of interest was a fair value gap, and the confluence was 930 equities open. We didn't trade the C2 because it has a large CST, and we waited for that continuation order block and traded that. So now we will go over another example. Now these are the examples which I've executed in this week. So these are kind of trade breakdowns. I will go over these according to the flowchart. So starting from the daily buys, we have SMT divergent at this low, and the Euro USD is tagging that, which is making this an order block. Since we have an order block, the Monday candle expanded inside that, so we would expect the Tuesday continuation higher because we have a bunch of failure swings above. Same on the Euro USD. So this was our daily buys going into the day. Now we will drop down to the 4-hour chart to check that established low of the day. Now on the 4-hour chart, you can see going into the new session. On the Euro USD, we are kind of consolidating, and we want to see that manipulation up the low to get expand higher. So this is a failure swing for me. So I waited for the 9M, which is the new 4-hour candle on the Forex, and waiting for that. So the 9M candle manipulated that low, and it created an SMT divergence on the GBP/USD. In this case, the GBP/USD was a stronger asset, so I traded that. We have a reversal candle, which was the 9M, so dropping down to the 1-hour time frame to confirm the established low of day and the further price delivery. Since there isn't any driver or 930 and Forex, so I would wait for the reversal candle and I will trade the continuation candle higher. And as you can see, we have bunch of failure swings on the GBP/USD, so we would want to see manipulation lower followed by expansion higher. We can use the further price delivery here. From this candle, you can see the next candle didn't expanded. It was an inside bar, and this was also an inside bar. So we need some kind of manipulation to then expand higher. I also told you in the side notes that if price is consolidating, then you would wait for that manipulation to get inside of the distribution higher. So dropping down to the 5-minute chart, So here on the 5-minute chart, you can clearly see this is a consolidation. We need a manipulation to then get on side with the distribution higher. And there we get it. We get a manipulation lower. And now we want to see a closure above this down close candle to make this as a change in the state of delivery. And now we have closed above this candle. So I can enter on the next candle because this is too obvious for a reversal. We had a consolidation, manipulation, and then distribution higher, and we have multiple SMT divergences with the Euro USD. So I'm entering here, my stop loss below the bodies, and I will target 2R, and the price expanded higher, completing our objectives. So now recapping this trade with the flowchart, do we had a daily bias? Yes, we were expecting Tuesday continuation because the Monday candle expanded. And was there any established high or low of the day? So we had that. We had consecutive series of down close candles followed by close above a London reversal, and then manipulated in the new recession by the Euro USD, which was confirming this candle is a reversal candle, and we had a consolidation, further price delivery, followed by a manipulation and then expansion higher. In this case, we traded the candle 2 because we had multiple SMT divergence with the Euro USD, and it was too obvious for a reversal because it was a classic accumulation, manipulation, and distribution. Now in this example, this is also the trade which I took on the gold on Wednesday. So we will go over this step by step according to the flowchart. So the first step is the daily bias. So after a large expansion, we had a huge expansion on Monday and Tuesday. We want to see another further price delivery, and also on the silver, we reached into this high, so we need that another further price delivery, either a continuation higher or a reversal lower. Since we were expanding higher from unestablished low of the week, we were expecting a visit to the weekly open or a reversal back into the range. So we took the previous day high. Our bias for this day was bearish. So the first step is the daily bias, which is bearish. Now we will go to the 4-hour chart. So after reaching a high on the silver and after 3 days of expansion, we had another further price delivery, accumulation, manipulation, creating SMT divergence with the goal, and now distribution lower. And here you can see we have another SMT divergence. That 7 a.m. candle on the silver is taken by the 8 a.m. and here we don't have that. So this is an SMT divergence. Also, we have established high of the day confirmed by the 8 a.m. candle, consecutive series of up close candles into the SMT divergence followed by closure below with the 8 a.m. candle. So these are multiple confluences. I was targeting this objective right here because after large range days, we are getting the small range days. But the daily candle was also supporting that exponential. There is a small wick, and this was our target. So now dropping down to the 5-minute chart, all of our rules are aligned from the flow chart. Daily bias is clear, it is bearish after a lot of expansion. And now on the 4-hour and 1-hour chart, we have that reversal, established high of the day, accumulation, manipulation, and distribution. And the next further price delivery, we were in that expansion lower, but we had a SMT divergence at a candle, which was a retracement, and now we are trading that expansion lower. Can we trade the second candle? No, because there wasn't any driver or something aligning with that. So here we have multiple SMT divergence with the silver, SMT divergence at this candle high and that hourly high. So now we are waiting for that continuation order block to get inside with the distribution. So waiting for the next candle open. So even on the lower time frame, you can also use the further price delivery. We had an expansion from the start of the candle, and now we are having that retracement into fair value gap followed by a closure below. So I took the next candle entry, stop losses above this high, and I was targeting this low, and the price expanded lower, completing our objective. So these were all the components from the flowchart. So with this, I will wrap up the examples. So this is the flowchart and the idea I'm trading daily. And once again, thanks to T-Trades for his teachings. Hope this will help you with your trading. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you next week.